Okay, so welcome back to my channel. So for those who haven't subscribed to this channel or those who are new in this channel, please make sure that you subscribe so that you will get the notification bell when I posted the video. Also make sure that you like this video. So today I'm going to do IFRS 15, which is the contracts with customer. So basically, before I go to the question, I prefer that we must go through some principle under this chapter so that you will be able to know what has been applied when we do the question. So when we talk about IFRS 15, we are talking about the contract that happened between the company and the customer, or between the company and the company. So when we deal with this IFRS 15, what you have to know is that we have a 5-step that has to meet in order for us to conclude that we have IFRS 15. So if one step doesn't meet or doesn't satisfy, which means that we are not going to recognize the revenue, all steps must meet. Okay, so I will go through some steps here and give a brief on what is happening so that we go to the question. So step number one is to identify the contract with the customer. So this step is basically means that there must be a contract. There must be agreement between two parties, whether it's a company and company or company and customer. So in order to say that there is a contract, both customer and company must sign, must put the signature. Okay, so step number two is to identify the performance obligation in the contract. So a performance obligation is a promise in a contract to provide goods or service. So the company must promise to provide a goods or service. Okay, the promise in the contract are recognized as performance obligation if goods or service are distinct. So the meaning of distinct is simply means that the customer must benefit from that good that he or she is going to receive. Then we can say that the good is distinct. So second requirement is that the entities promise to transfer goods or service must be separately identifiable from other promises in the contract. So this point simply means that the promise of the company must be ascertained. We can't go to the spaza shop and order BMW. How are they going to deliver it because they don't sell it? Which means that in that case, it's not the contract, the performance obligation is not promising. But if we purchase something from the company that deals with a certain thing that we ordered, which means that uh, the promise is identifiable. So you need to check that uh, when you read the scenario. All right. So step number two is very important, guys. Is very, very important. The step that we were doing. Remember, we can't recognize the revenue if this step does not meet. In order for us to recognize it as a revenue, the company must first perform. The payment is not matter. As long as the company perform, then we can recognize a revenue. Okay, step number three, determine the transaction price. There must be a price on agreement. You are going to pay so much. We can't just say, I'm going to pay you, give me a laptop. How much? We must be able to determine the amount. Okay, so step number four, allocate the transaction price to the performance obligation in the contract. Remember, some contracts you will find that there are two or more obligations that is going to be performed. For example, if I'm purchasing computers in a bulk, and also the company is willing to install the software with a certain price, which means that the price of delivering laptop, it must be separate with the installation. So we have to identify this, that a 20,000 is for laptop and 10,000 is for installation. This simple means that we have to do what? To allocate the transaction price. Is to allocate the transaction price. Okay. So in this step, we have to separate amount and show which amount belong to specific obligation. That's what I was saying. Okay. Then step number 5, recognize revenue or as the entity satisfy the performance obligation. Okay. If you understand step number 5, they didn't just say recognize a revenue when all those steps is met. They said as when entity satisfy the performance obligation. That's what I was saying on step number 2. The company must do something, must deliver those things in order for us to say we can recognize it as a what? As a revenue. If you check on all this discussion, we never heard anything about when the customer paid, which means that the payment is not necessary, but the performance of the company is necessary. Okay, so hint on this question. Most of the question will come with the complex transaction where you need to understand if there is accrued income or income received in advance. So, also in this case, be able to deal with deferred tax implication under IFRS 15. Okay, you don't have to worry about this. I'm going to explain easy stuff. Okay, question 1. Discuss accounting concern you may raise on the scenario for Ronewa Pty Ltd for the year ended 2019. Remember, when you are dealing with exam, the standard will not be separate. The standard will be complex to each other on the same scenario. You must be able to identify all those concerns, mixing up the standard. Okay, Ronewa Pty Ltd as financial year end 31 December every year. Included in the profit for the year ended 31 December 2019 is an amount of 400,000 that was received from customer as a deposit for apartment that will be constructed from March 2020. The financial accountant included the deposit in the statement of profit or loss to improve the reported figure since Ronewa Pty Ltd was in the process of applying loan towards the end of reporting period. So, if you check this scenario, there is an effect of IS1, Presentation to Financial Statement and Conceptual Framework. So, please make sure that you check my other video of IS1 where I have discussed the issue of financial accountant where he did something wrong in order to improve a financial statement. So make sure that you check that. You're gonna find the issue of going concern. You're gonna find the issue of accrual accounting. You're gonna find the issue of materiality. You have to check that on my video list. You will find them. So the one that we are looking for now is IFRS 15. Does this amount recognized as IFRS 15 as the financial accountant did? No. IFRS 15 does not met in this case. Why? No performance obligation has been satisfied. No performance obligation has been satisfied as Ronewa Pty Ltd will will construct the building or apartment in the next financial year. Okay, what was supposed to be done? Now we have to show the journal what was supposed to be done. They were supposed to record bank. They were supposed to debit bank with the amount of 400,000. After that, they were not supposed to recognize revenue, but to recognize income received in advance. Remember, we haven't delivered anything, but we receive the money that we are going to perform for the next year, which means that it's income received in advance. Okay, so remember, when you are approaching exam, we can't ignore the fact that we have to deal with the deferred tax. Okay, how the deferred tax is going to be affected in this case? What you have to check when you deal with deferred tax, check if the component that you are dealing with is an asset or is liability. If that item you are dealing with is an asset, your deferred tax must be liability. If you are dealing with a liability component, you must regard it as assets. It's vice versa. If it's income, you must deal with expense. Your deferred tax must be expense. If you are dealing with expense, when you deal with deferred tax, it must be deferred tax income. Remember, when you receive, you pay SARS. When you pay, SARS must give you something. It's vice versa. Okay? So, which means that when you prepare deferred tax assets, SFP must be debited. When you deal with liability, SFP must be credited because the journal is deferred tax and deferred tax. Okay, in this case, we're gonna have deferred tax assets because income received in advance is recorded under liability. We're gonna have deferred tax as SFP because it's an asset. Then we credit deferred tax of P and L. Then how are you going to calculate it? It's either you have been given the rate or you use 28%. Apply by 28%. Okay, 400,000 multiplied by 28%. It give you amount of 112,000. That's what you have to do on this question based on IFRS 15. Okay, now let's go to other question. Remember this question you also have to discuss the other issue that has been done by financial accountant, which is under IS 1. Okay, then question 2. Vari Pitwa Ltd is a company located in Limpopo which deal with computer and software installation. Vari has financial year end 31 December every year. Then on 1 December 2021, Vari Pty Ltd entered into a contract with Jane Pty Ltd for the delivery and installation of computers. Then the contract stipulates that Vari Pty Ltd will deliver computer on 27 December and do installation on 30 December 2021. Okay. Then the contract price is 580, which include installation of 130. GNP2 Ltd made a payment of 580 on 21 December 2021. VARP2 Ltd managed to deliver computer on 27 December 2021. However, due to some circumstance, VARP2 Ltd will do installation on 4 January 2022. Okay, then required with the reference to the contract between VARI Ltd and GN Ltd, allocate the transaction price to identify performance obligation and state the amount of revenue to be recognized. So they didn't ask you to prepare all the steps, but you have to prepare the transaction price and allocate the performance obligation. So what you have to do first is to write down the principle under that step that you have been given. So in other words, is to copy what is on the standard. Then after that, after you copy one sentence, you comment based on the scenario, and so on and so on. So I'm not going to recopy those principles. Okay, I'm just gonna answer. Okay, then they say we have to allocate the transaction price. Let's check. The transaction price is how much? It's 580. The transaction price is 580. Now let's check. Performance obligation. Okay, performance obligation number 1 is to deliver computers. Okay, performance obligation number 2 is installation. Okay, then when you explain, you have to write down that the performance obligation is to deliver computers on this date. Then now let's allocate the price. The delivery of computer is how much? Okay, let's start with the installation, because they said installation is 130,000. Then delivery of computer, they said is 580, which is including the installation. Now we have to separate them according to the performance obligation. 580 minus 130, because we have to do them separate. Then 450 is for delivery of computer. So we allocated the performance obligation to the transaction price. Okay, so let's proceed. The next step is to discuss which amount is going to be recognized as a revenue. Okay, we have to check what? The performance obligation, guys. That step is very important. So let's check the performance obligation. They said VAR P2 Ltd, to the second paragraph, VAR P2 Ltd managed to deliver computer on 27 December 2021, which means that for the delivery of computers, it met the performance obligation. However, due to some circumstance, VAR P2 Ltd will do installation on 4 January 2022. Now we have to state which amount is going to be recognized as a revenue. So the amount of 450 will be recognized as a revenue on 31 December 2021, which means that we have to prepare the journal, which we're gonna say a bank on the debit side and 450,000, and we credit an amount of 450, okay, as a revenue. Remember, the delivery is made, which means that we have to do what? To recognize the revenue. Is there any deferred tax? No, there's no deferred tax on this transaction. Why? Because the amount that is going to be recorded under books of accounting is the same as what is going to be recorded under books of SARS, which means that what we calculated is the same as what they calculated. There is no temporary different. Okay, but the installation will be made next year. But we receive that money. Okay, we receive that money. We have to show it in the bank. Yes, we receive it on our bank because they paid the total amount of 58. But what do we credit? Income received in advance. Why? Because we haven't delivered. If we fail to deliver, the customer is going to claim his money, which means that in this case, SARS cannot charge us, which means that we have to create a deferred tax. Remember what I said on deferred tax? If we have a component which is related to liability, we have deferred tax assets. Income received in advance is liability, which means that we have to prepare deferred tax assets. SFP, then 130 multiplied by 28% is going to give you 36,400. Then you credit deferred tax P&L amount of 36,400. That's what you have to do on this question. But please make sure that you go with the standard so that you won't waste a lot of time cramming those principles. Okay, so let's go to the other question. Question 3. On 1 November 2021, Dakota Ltd signed a contract with Maxi Ltd on which Dakota Pty Ltd will deliver a box of tire to Maxi Ltd on 25 November 2021. Then boxes of tile to be delivered is 1,000, which one is costing 50 Rand. In addition, Dakota Ltd will be also build additional room at Maxi Ltd premises at additional cost of under 10,000. So on 25 December 2021, Dakota Pty Ltd deliver 1,000 boxes. Then on 1 December 2021, Dakota completed additional room at Maxi's premises. Maxi will make a payment on 3 January 2021. So the required identify the performance obligation and state the amount of revenue to be recognized in 2021. Okay, now let's discuss the performance obligation. Firstly, you write the steps and you write the name of the step that is needed, a performance obligation. So you firstly write the principle under performance obligation, then you discuss what I'm going to discuss now. So the performance obligation in this case, Dakota will deliver boxes. Okay, performance obligation is to deliver boxes of tiles. Then you also have to show the date that on this date. Then the other obligation is to build additional room. Okay, then after that, let's allocate the price. Okay, boxes, remember, is 1000 boxes, the which we have to multiply by 50 rand per each box, which means that you're gonna get the amount of 50,000. Okay, then additional room, they said is 10,000. 10,000. Now let's check if the performance obligation has been satisfied. Okay, they said Dakota P2LT delivered 1,000 boxes on 1 December 2021, which means that the performance obligation of delivery of boxes has been satisfied. Okay, explain this in detail. Then what about the room? They said on 1 December 2021, Dakota completed additional room at Max's premises. The room has been complete within the reporting period, which means that even the room has been satisfied. You have to show the date when you explain that it has been satisfied on this date, which means that now we have to conclude which amount is going to be recognized as a revenue. Let's check the last line. Maxi Ltd will make a payment of make a payment on 3 January 2022. They're going to make a payment next year. Are we going to recognize it as a revenue? That's the question that you have to ask yourself. The answer is yes. Why? Because both obligation has been satisfied, which means that the total amount of 60,000 is going to be recorded as a what? As a revenue. Then 60,000 will be recognized as revenue. So what about the journal? We don't have a bank this time because we didn't receive anything, which means that we have what we call accrued income on the debit side. Then the amount is 60,000. We haven't received anything, but revenue is recognized because the performance obligation has been satisfied. The performance obligation, it doesn't matter whether the payment has been received or not, as long as the company has delivered. Okay, so in this case, what is going to happen when we deal with deferred tax? Remember, accrued income is fall under current assets, which means that deferred tax must be liability, which means that we are going to say debit deferred tax P and L. Then it's gonna be 60,000 multiplied by 28%, which we are going to get 16,800. Then we credit deferred tax SFP 16,800. Okay, this is what you were supposed to do on this question. So IFRS 15 is simple and straightforward. So please make sure that you have subscribed to this channel, like this video, so that when I post the video, you will get the notification. As you are approaching the exam, you should expect more videos. Thank you for watching. See you next time. Bye.